Thank you for attending. Stablecoins are killing it. Number 22 on Thanksgiving Day here in the United States, for those of you who are calling in. I'm Lou Kerner with Just Stable. We have a stablecoin message boards at juststable.com. We host the show, do a lot of blogging on Medium under Lou Kerner. I'm actually a stablecoin analyst with Quantum Economics. And so I'm spending a lot of my time in this space and just doing this as a mitzvah for the industry and for myself. So, I can learn and talk with some of the most interesting projects in the space. And we've got another super interesting project today, and that's Ichi.farm. And this is our first anonymous speaker. So obviously he's not going to have a video. Masa, I guess, is what it's called, and the gentleman speaking with us today is just one of the many Masas. So he is not the Masa, but just one of the people who is able to use the Masa handle and come on and tell the Masa story. And so Masa, welcome to Stablecoins Are Killing It.
Thank you, Lou. It's great to be here and to represent the community at Ichi.farm. Masa Fukuoka was a Japanese farmer, and he died maybe 12 years ago. And he believed in doing things a natural way, all organic. And he often outproduced and got more per acre than even some of the largest industrial operations. And he thought that his same hands-off approach would apply in all areas of life, including medicine and finance. And so that was what inspired naming the project in his honor. And we do try to take the same approach to our stablecoin design. It is really an attempt to make the most trustworthy, most over-collateralized, safest decentralized stablecoin. And the results over the first couple of weeks have been fantastic. We minted 1 ETH, the Ethereum stablecoin, on November 14th. We already have $629,000 of 1 ETH in circulation, and it's already 109% over collateralized. And 96% of that is USDC, which, as you know, should stay stable against the US dollar. Similarly, BTC launched the stablecoin for Bitcoin on November 22nd, and already 324,000 BTC stablecoins have been minted. It's already 105% over collateralized, even though it's 100% backed by existing stablecoins. Over the next 60 days, we're going to launch another 8 stablecoins. 3 of them were named at project launch. Those are one link for the Chainlink community, one HBAR for the Hedera Hashgraph community, and one DAI for the Maker community as a thanks for them getting started in the world of decentralized stablecoins. Ichi, the governance token of Ichi.farm, will be used to select 5 additional stablecoins as we reach the end of the named schedule. Now,
so
on
Ichi, we kind of dove in and that's great, but can we take a step back? What is Ichi.farm?
Ichi.farm is a website for minting or redeeming stablecoins, exchanging between stablecoins and other crypto assets, and providing liquidity to that exchange.
And how was it started?
Well, there was a group of us who saw what was going on in DeFi, especially the Uniswap uni farming, and noticed that centralized stablecoins had the majority market share of DeFi. And we were big fans of MakerDAO and DAI and didn't want that trend to continue. So this was put together to reintroduce decentralized stablecoins to DeFi.
And so when you say, obviously you're anonymous, but I guess you know some of the other folks in real life, I guess, who are part of Ichi.farm. But so, you know, how is it launched? You know, where are the economics going?
There were no investor funds, no pre-sale, no pre-mine. We simply created an ERC20 contract for the Ichi token, and we put all of the Ichi into the farming contract and became farmers ourselves. And it's maybe some people on this call might not know what farming is since it's such a new trend, but it's really getting the governance token in exchange for providing liquidity to the exchange. As far as the other Masas
And
in the community,
by providing liquidity in the form of Ichi tokens or ETH tokens or BTC or these other new tokens?
all of the above. Each liquidity pool has two assets and allows you to swap from asset one to asset two or back. So depending on the pool you're joining, you need to have a different pair of assets.
So take a look at what do you need in order to mint 1 ETH?
Minting, we'll get to in a second. I did have some screenshots of it, but it's different than providing liquidity. When you're minting, you are putting $1 of value into the system and getting back a single stable coin. When you're providing liquidity, you're not sending your funds anywhere. You're keeping control of them, but you're allowing people to swap between your two assets.
Okay. So thanks for clarifying that. And so the two assets then that need to be staked in the 1 ETH liquidity pool.
Okay, let me talk through the five core products, because there's so much terminology and many of these terms aren't even 6 months old. This would not have been possible to build even a few months ago. So if you look at the minter, and again, minting is simply taking the assets you have and turning them into a stable coin. The Ichi.farm minter is unique because it has a minting ratio. You can see it in the upper right-hand corner of the screen. Right now it's 96%. Now what that means is you have to pay in 96% existing stable coins, and in the case of 1 BTC, that existing stable coin is USDC. You have to pay the additional 4% in Bitcoin in the form of wrapped Bitcoin or WBTC. So, and this minting ratio will fluctuate hourly. If on the hour, the price was trading beneath $1, this minting ratio will go up 0.1%. If in that hour, the price was trading above $1, that minting ratio will go down 0.1%. To a limit. There is a limit, a minimum minting ratio that is set via community governance. After minting, or even before, you can click the little link next to 1 BTC, and you can see all of these assets stored on chain. In the little screen capture at the bottom, you see there's 299,000 USDC, and there's $12,000 in wrapped Bitcoin. The USDC can't be touched. Nobody can spend it, nobody can move it. It's there so that when you return a 1 BTC with the redeem function, you get back exactly $1 in USDC. The WBTC can't be spent by the algorithm at all. It can't, when you don't get it back, when you use the software to redeem a 1 BTC, instead, that wrapped Bitcoin is a community fund that is governed by the holders of one BTC. And that's what drives the over collateralization. Over time, that fund gets larger and larger to where you could imagine after maybe just a year, this coin becomes 200, 300% over collateralized. And all of those funds are in the governance of the people holding one BTC. Are there questions on that? Because it is a unique design.
Sure. So just to have the flow. So if I want to create 100 one BTC, so $100 of one BTC, I need to put up $96 worth of USDC and $4 worth of BTC, so wrapped BTC, so it's able to be locked. Is that correct as kind of step one? To get
That's
100?
Right. That's
okay.
Right.
So now I get 100 BTC. Now I want to cash out my 100 BTC. And you're telling me that I'm going to get 100 USDC for that.
Correct.
And so if I put in 96 USDC and I'm getting back 100 USDC, where is that additional 4 USDC coming from?
It comes from the $299,000 of USDC you're seeing on the screen. Now, I think that what you may have been trying to ask is, what happens if people turn in $299,000 at the same time and I'm left holding the remaining one BTC? Is that right?
Well, that's where eventually you would get to, obviously.
Okay, good. So if in that hypothetical situation, those people who were holding the last one BTC could vote themselves into the remaining wrapped Bitcoin, because that fund is controlled by the people who own one BTC.
Okay, and so over time, as you pay out, so is the wrapped BTC, so the wrapped BTC is obviously part of the assets collateralizing the one BTC.
Yes, but I call it community collateralization, because it really, these funds can't be taken out by any individual person like with DAI. In this case, it takes a community vote to move them. But as you can imagine, if you were holding the last one BTC, and there was a lot of wrapped Bitcoin there, and you had the only vote, you'd probably make yourself whole.
Yes, you'd probably do okay.
Yeah.
And so since you've launched this now, and if you want to, I'm sorry, I was going to ask more questions, but you said there's a 5-step process that you wanted to walk through.
Well, I'll show you all five of the products within Ichi.farm, just so everybody understands the mechanics, and then maybe we can ask questions on each one, and then once you have the complete picture, we could talk through any additional questions.
Okay.
So most people will not use the minter, because you can also just trade for one BTC. Then you don't have to have cryptocurrencies in 2 parts or worry about minting ratios. Really, the minter's there to make large quantities of one BTC. So there's a swap function on Ichi.farm where you can swap wrapped Bitcoin for one BTC. And that's better for smaller amounts. If you try to swap an extremely large amount, there would be price slippage until arbitrageurs came and took it back to $1. But it's the better way to acquire smaller amounts. After you've acquired your one BTC, you can deposit wrapped Bitcoin and one BTC to a liquidity pool. And it's just one of the many pools on Ichi.farm. These pools are what make the swap function. By providing both wrapped Bitcoin and 1BTC to this contract, you enable people to switch from 1BTC to WBTC or back again.
And is there a bonding curve, or?
Yeah, this is the website. It uses Uniswap version 2 contracts right now. I do think that other bonding curves should be considered by the community. There have already been some proposals, especially for going between the different stable coins themselves.
So curve?
Correct.
Okay.
Once you have your LP tokens from providing liquidity to the exchange, you can farm with them for just the next 60 days. Farming is the process of depositing those liquidity pool tokens and getting a share of the governance coin Ichi. That governance coin has a hard cap of 5 million, and all of them will be distributed at 10 per block over 500,000 blocks. And you get your share by entering the Ichi.farm farms.
How long will that take?
About another 60 days. And in that time period,
so like, you know, with the Bitcoin mining taking a lot of years, the Ichi farming is 60 days.
Correct. With Bitcoin mining, proof of work blockchains or proof of stake blockchains, the main purpose of mining is to secure the network. You need to make sure that there is an economic incentive to continue to run the computers. With Ichi.farm, the network is secured by Ethereum, the Ethereum miners. So the Ichi.farm token doesn't need to be distributed over a long period of time.
And so the distribution of that token, you know, is a way to jumpstart the community and reward the people, the early people who propelled the community forward.
Exactly, and to put the governance rights in the hands of the most important thing is to put the governance rights in the hands of that community.
And what have you learned about that? Because the experience from most decentralized community has generally been pretty low voting turnout.
We have had over 30% turnout on our votes so far.
Which is much really higher than average,
yeah.
Right? I mean,
yeah. It's I believe due to the 100% fair launch. If there is a venture capital firm that takes 20% of the tokens and a team that takes 20%, then what is the point of having a token? You know you can't win a vote. But since it was a 100% fair launch and everybody here, many people who don't even know each other, have almost equal shares of tokens, the voter engagement has been much higher.
And then what happens after 60 days?
After 60 days, you can take your Ichi and you can stake it and earn more Ichi. So you can put it in this staking mechanism and it gets not as much, just 0.05% of the trading volume that occurs on the swap, and that is distributed to Ichi holders. Now, while the Ichi is staked, you can also use it to vote.
And so you're minting more Ichi.
You're not minting them. What it does is it takes the fees from the exchange and then uses the exchange to buy Ichi from the exchange, and then it distributes the Ichi it buys.
Okay. So you're always creating demand.
Correct.
That's when you were, creating this, inventing this. I'm not sure whatever the word you use. Where did you get the inspiration from? What other projects?
Well, again, I played just a role in the broader team,
Sure. I'm
and
saying, yeah,
we
broadly
were
the
yeah
community. Where did
yeah
the community get inspiration
the
from?
the um, the fractional model was inspired by Frax, but in Frax they burn tokens and become fractionally collateralized. In this one, we hodl them
So
and
Frax just
become
has a white paper now, right? They're not launched yet.
yeah. But we saw their white paper and liked the demand-driven minting ratio, so we copied the minting ratio. But like I said, this coin becomes massively over collateralized. Frax is designed to become fractionally collateralized. So that's a big difference. We liked,
Yeah, it's pretty fundamental. Yeah.
yeah, we liked Uniswap. Obviously, the automated market maker is built into our website, but we didn't like the fact that with Uniswap, 40% of the unicoins went to the team and investors, and we didn't like that the unicoins didn't have a way of capturing value long after small players could get involved. You know, and so the economics are different, but the technology is the same. The economics are more similar to SushiSwap economics. And then obviously we have a big debt of gratitude towards Snapshot for the governance functionality, and the compound team for even coming up with the idea of yield farming.
I'm sorry, who is the previous before Compound?
Snapshot, they make the interface we use for our community votes.
Ah, okay. Very cool. And so are you, is it just a voting mechanism, or is it a governance mechanism?
What Snapshot does is it looks at the ERC20 balance of different wallets at a certain block. And so you can schedule a block snapshot. I'm going to snapshot the balances at that block. And then all the addresses that had balances at that moment can vote over the voting period without having to pay Ethereum gas. Now, with Ichi, there is an extra contract, again, inspired by SushiSwap, which is called Ichi.farm. And it goes and looks at the Ichi stored on the Ichi swap exchange and the Ichi staked on the Ichi.farm staking product, and adds it together to give each address Ichi.farm. Any circulating Ichi that's not in the exchange or not staked wouldn't count.
So you should get a pretty high, hopefully, staking ratio.
Staking ratio. Yes, we already have. Oh, yes. I think 80,000 of the Ichi in existence are staked. The rest are in the exchange, and very few just circulate around.
And 80,000 out of how many have been minted?
560 at this point.
Okay. Okay, so what's next now?
Oh, we already talked about voting. So that's it. That's the summary of Ichi.farm. What's next is we are launching a stablecoin for the Chainlink community this Sunday, and we continue to host votes on the economic model.
And so what have you learned from the launch of the one BTC, one ETH coins?
I think that the most encouraging thing is how quickly it's becoming over collateralized. That's really exciting. We didn't expect it to happen that fast. It's been exciting to see the community support We don't have a marketing budget. This has been all word of mouth. But the people who find out about it tend to contribute.
When you talk about over collateralization, is the right way to think of it is the over collateralization assuming that things don't break, but if things continue to work as they're working so far, that the over collateralization is value that accrues to the Ichi holders?
No, the Ichi holders get value from the exchange. The collateral is governed by the stablecoin holders. So there's two levels of governance there. So when you go to vote on what to do with the collateral, that isn't, again, the stablecoins, you can't do anything with them. They just stay there. The excess reserves are under community governance, but the community that votes on what to do with it are only the people that hold that stablecoin.
Okay, so it's the
Ichi people, Ichi can't vote on what to do with the excess reserves. Only the stablecoin holders can do that.
So the value that's accruing to them is from the fees.
For Ichi, Ichi earns from the fees, and as you know, stablecoins require constant trading to remain stable, and the fees with size should be substantial.
Yeah, I think Curve is generating some meaningful fees from trading stablecoins.
Mm-hmm.
So, and then we were talking about what's next. So how do you're introducing new coins now into the ecosystem. But I assume the assumption is also that the existing coins will continue to grow in terms of market cap.
Correct. So the Ichi community would like to get the word out about 1 BTC and 1 ETH. We would like people using DeFi to understand the difference between trusting an over-collateralized on-chain community-governed coin versus the opaque centrally run coins they're using today. And we think that they'll like it when they learn about it. And then we think that they'll put it into their DeFi applications and use it instead.
And so do you guys consider yourselves a Tether killer?
Yes.
And so what do you think needs to happen?
At least within the space of DeFi, I guess if you think in terms of centralized exchanges, maybe that's different. But why would you rely on an organization, a single organization, to run a stable coin and something called decentralized finance?
Obviously, you're preaching to the choir, but if you take a look, there's at how people are actually acting. People are very comfortable, right, using Tether and USDC in DeFi.
It's small decisions. I think that the other day I went to use DAI and it cost $1.04 to buy it on an exchange, which feels like a bad deal for a coin that should be $1. And then when you went to mint, you had to pay in. I was holding ETH, so it had to be 150+% of the value, which once again feels like a bad deal. In this case, when you buy it from an exchange, it costs $1, just like Tether. And when you go to mint it, you pay in $1, just like Tether. So now you get the benefits without the downsides.
I'm agreeing with you. I'm just, I mean, it'll be interesting, right? While Tether does have these problems, the fact is that Tether is working, right? All anybody is using Tether for is they're buying it so then they can use it and give it to the next guy who will accept it as a dollar. And and that, I mean, do you see that as working today?
We can even play it forward further. Let's say that adoption is so sticky.
I asked a question. Can you answer that question? And then I'm happy to go on to where you want to bring it. But
yeah, exactly. I think that Tether is working until it doesn't. And
completely agree.
Yeah,
I completely agree.
And you don't know when that time that it doesn't is. So it is risky to put millions of dollars of Tether in something like Compound and let it sit there for years, because whenever it does happen, you'll be affected. Now, here you can see the assets sitting on chain. You know they're there. You can confirm they're there, and you're not trusting the Tether organization. But there's even more. Let's say that Tether continues to have its position in as this coin becomes over collateralized. But then after it's maybe 300, 400% over collateralized, what if this community starts to try to create a slush fund off of the next 100% of collateral and starts to use that for adoption incentives, discounts, better interest rates in DeFi? So I think eventually a model like this will take over. I think it's just a better fit for the industry, and the exact timing and exactly how it occurs is more of the question.
Okay. So we're going to move on to the Q&A aspect. I mean, it's been Q&A with me, but we're open it up to the audience. And we've got our first question coming from Jay. Jay, your audio and video are now open. Sorry for not alerting you to that fact that was going to happen.
How's it going?
Welcome.
Good. Yeah, so I guess my question, I have a tech background, and I don't have a very in-depth crypto background. But I know Lou and I follow everything he's doing, so I've never heard of Ichi. This is the first time introduced to it. I think leading into the question is really leading into what Lou was kind of, I think, saying in a different way. I guess my question is, I didn't wake up this morning thinking the world needed more crypto. We got a lot of crypto out there. It's interesting what you're doing. I just don't understand how it gets adopted. Like, how do you get to mainstream adoption on this? I mean, I don't think anyone's seeking it, right? So why? Like, I'm hearing a lot of words, right? And I'm listening to this and I'm thinking to myself, how does my mom figure this out? How do the kids I went to college with figure this out? Like, I feel like this is way highbrow for people. And I just don't know how this gets widely adopted. And I'm not saying it never does. I'm just trying to understand you and your group, right? How do you guys plan to bring this to market so that people can understand this in a very simple, clicking way? And it's not clicking for me. So I'm just trying to see if you're thinking about this outside of the context of being in the weeds, so if you get outside the weeds and you look at this, why do we need it? How does that make sense to people?
So anytime you have a question like that, dividing it into who you're talking about is very important. So I'm very glad that you mentioned your grandmother, and maybe she's a computer science expert or DeFi enthusiast, but I'm imagining you mentioned her because she's not.
Well, what I was trying to say, I'm sorry to cut you off. I'm sorry to interject. What I was trying to say is that I was just trying to say, if you're the layman, right, you're the mass market, for anything to work, it's got to go mass market at some point. And of course, everything usually starts off in a niche community of which is what you have now. I guess the real question really is, how do you go from a small group to widely adopted mainstream on this? Because I feel like everybody's thinking the mainstream. If they think in crypto, they're thinking maybe Ethereum, certainly Bitcoin, and the variety like Zcash and some other things. But there's just a million different coins, and then there's obviously you're going into stablecoin. There's a variety of different stablecoins as well. So how and why is this the one that folks?
Okay, I want to. So what I was trying to. Yes.
Just a moment, just before you answer, just wanted to, if anybody has a question for Masa, you can put it in the chat. And if we pick your question, we will, as we did with Jay, open up your microphone and video, let you ask the question yourself and the follow-up. So Masa, you want to answer Jay's question?
Yes. So Jay, you have my background previously is in product, not engineering, and you asked my favorite product question, which is, who are you delighting, and why, and how are you delighting them? Basically, this wouldn't mean anything to my grandma. So let's take 3 groups of people. The first group is a DeFi enthusiast. The second group is somebody who has cryptocurrency in their wallet. And their third group are the rest of the world that doesn't, right? For the first group, the DeFi enthusiast, you really only need 500 to 1,000 people in the world to care to print your first billion Ichi.farm stablecoins. This product that you're looking at is designed for that group of 1,000 people, right? And so far, when they find it, they love it, right? Now, for your second group, which are the cryptocurrency people. So these are the people that maybe they are somebody who just believes in Bitcoin, because that's the biggest group, right? They don't know anything about Bitcoin Cash even. Maybe they've heard of Ripple, but past that, they don't know what crypto is. They're just holding some Bitcoin. Now you show them a USDC, or you show them that one BTC logo, which one are they going to pick, right? Now for your mass market, by the way, that gets you your next 100 billion in Ichi.farm stablecoins. Now your next group, which is the general consumer, they don't even want to know about crypto. But what if you could give them a Visa card where if they held a $5,000 minimum US dollar equivalent balance, they got 5% cash back? Would they care then?
Yeah, I actually know a guy, Fred Krueger, that has a new product called Proton, and I think they're doing something similar with giving out debit cards, right? So that you can, so people, you know, for this to go mainstream, and I think the holy grail is that you can go into a store and buy something. Obviously, we've heard about Square and PayPal, some others that are going to maybe bring it to mainstream. I guess the problem with that is if you're using Bitcoin, there's a lot of volatility in it. Somebody wants to put $100 in to fund it, and then their account balance is $96 5 minutes later. Right? So like that's
Right.
kind of the challenge with typical. I would imagine the stable coins eliminate that issue for the mainstream audience. So I guess though the problem is that you're not known yet, and I guess people are going to be confused as to what's the difference between this and Bitcoin and not really understand it. So I'm just trying to say, what is the click?
Right.
Like how do they get over that?
If you started with that market, you lose, which is why I went in order. You get your first billion coins printed with the DeFi enthusiast. You get your next 100 billion to trillion printed with crypto enthusiasts. And then you're in the trillions when you are issuing payment cards like the one I described.
Okay, interesting. All right.
So when you talk about the DeFi enthusiasts, thanks for the question, Jade. When you talk about the DeFi enthusiasts, what exactly is it that you think that they're responding to?
Well, I put a game in it for them. We didn't talk about that on this show.
What? Sorry. Jay, I meant to make you a back to an attendee, and I put Masa back to the attendee. Hey, Masa, sorry. Masa? You turn back on your microphone? Masa, your microphone's on mute.
Hey, we built a game into the Ichi governance token distribution. And the reason is because we believe DeFi is largely a massive multiplayer online money game for for people who have very significant sums. They average $80,000 deposits in these games, and that is what resonated with that group. That target core group of 1,000 people, because it gave them more interesting moves to do with their money and more ways to get excess yields, and they like that.
And how are you communicating with them?
Just over Telegram and Discord, and they have their own Discord groups and Telegrams, and it's all word of mouth. They love to share their plans and strategies for getting higher yields.
I think we've got another question. Let's see, from Lori. If I can, now she is a panelist. So Lori, you have a question for Masa?
Hi, thank you for taking my call. My question is, other than centralization, are there other problems with Tether or USDC?
Oh, okay. It's kind of boring. You put $1 in, you get $1 back if it works in the best way possible. There is no chance for excess collateral. There is no chance for stimulus spending on top of excess collateral. And then therefore there's nothing that's very interesting to govern. This is interesting because it drives the adoption of your crypto, and it transitions the world to crypto.
Okay.
Okay.
Thank you.
Yeah, thanks, Lori. In terms of kind of giving them, I guess the opportunity to participate in something, again, depending on where they're participating. On the 30% side, which I thought was super interesting, you talked about 30% of the audience, or 30% of the shares being voted. Can you talk about what's been voted on so far?
We had a proposal to implement rewards for a Uniswap pool. Previously, we had only rewarded those liquidity pools on Ichi.farm. That passed, and that same night, the amount of liquidity in the Uniswap pool went from $6,000 to $180,000.
That seems like a nice progress.
Yeah, so there was a proposal on our game as to its future and whether we would continue playing it. That passed as well. And there are upcoming proposals being discussed in the governance channel of Discord on things like stablecoin parameters and the specifics of governing one BTC and one ETH.
Learning a lot. We had a question from the audience. They wanted to remain anonymous. I guess you can appreciate that. When will watering be fixed on the Ichi.farm?
You see how much they like the game,
yes.
Right? Yeah, so when it was operating, irrigation bots sent Ethereum gas transactions in the tens of thousands of dollars, getting tipped for doing so. And then they automatically sold on the market, driving the price down. We had to temporarily pause it while we work on our own whitelisted, irrigation system, to the person who knows what I'm talking about. But I don't think that we want to have anybody who is watering the crops, again, sorry for the people who don't know about the game, sell in the market in an automated way like before. So we're looking for investors to do the crop watering in exchange for longer coin lockup periods. And so that those talks and negotiations are happening, and more proposals will be given to the community in the coming days.
When you think about the community, do you think about, how do you think about engagement? Is it just voting, or what else are you tracking in terms of community involvement?
Really, I think you can imagine the normal things. We like to see new people coming into the Telegram, more people following us on Twitter. But the most important part, I think, really Telegram has been the place that we discuss how to play the game. Discord has been the place that we discuss how to build the product, how to get it adopted, and how to form partnerships in the industry. And it's been encouraging to see that forum pick up as people transition from playing a game to getting serious about stablecoins and DeFi.
Okay, cool. Well, look, this has been super interesting. Look, we kind of generally finish our show with two questions. One is, what is it that you would like people to remember about this call, or what didn't we talk about that you want them to know about Ichi.farm, and how should they start getting involved with Ichi.farm?
Well, the first thing is that they can be Masa as well, right? I'm just here representing a community. This particular community, again, had no investors, no investor funds, no team cut, and right now, only 12% of coins are circulating. So if you join now, you have almost the same starting point as the people already there. And so with that, the last thing is follow us on Twitter, try out the website, ask any questions you have.
Okay, terrific. And the last question, if we have you on in a year and we're sitting here talking about stable coins, what do you think we'll be talking about in a year that we're not talking about yet? Tough question.
Yeah, it is. It is. Clearly, at that end of that year, I think I'd like to be talking about the success of these crypto-specific stable coins taking over DeFi, and on to that next stage of how do they compete for the general cryptocurrency enthusiast.
I think that would be a great win for the community. So thanks a lot for coming on. Thanks everybody for listening, and we'll see everybody hopefully next week for Stablecoins Are Killing It number 23, which we'll be featuring David Markley with Algorand. They're talking about everything they're doing on the Algorand blockchain with regards to stablecoins, and I think it'll be a lot more than people think. So thanks everybody. Thanks, Masa.
Thank you. Talk to you later.